Good morning, good morning. Welcome to our Tuesday, the 8th of July RT8 session at the Trading Syndicate. I am JJ, your cruise director. How's everybody doing this morning? Hey, Josh, Redbeard, Raj, Jam, what's going on? Hey, Johnny, what's going on? Lear, good to see you. Welcome to the folks joining us on YouTube. That's from, we've got the Love Boat is docked outside our apartment building. So that's why. Anybody remember that show from the 70s, The Love Boat? I live right next to a cruise dock where they dock cruise ships, so it's pretty funny. You can hear the song now, right? Actually, when it leaves, it blows this air horn, and it sounds like that. It plays the tune. Don't tell Ray. Uh, hey, good morning, Anne Marie. How are you? Oh, excuse me. Alrighty. So, yesterday we had a liquidation, which was really refreshing. Now, the Globex session hasn't had much liquidation at all. So, typical with this market, we only get liquidation for a day. Unless they try and scare us with some macro change. Right? So, let's take a quick look and see. So, Thursday we had that early close and just a real squeeze. We filled the gap. Finally, we did that yesterday, which is healthy. So let me get rid of this, right? Can get rid of the. Don't get to do that often in this market. We actually filled a gap, and we came right back into this cost basis before the 4th of July run up. So I was kind of hoping that we'd take out yesterday's low, take out 62.40 and come down and test 62.30. But in typical market fashion these days, the liquidating inventory from yesterday is now being sold up here. So the market's working nicely, and that tells you something. If the market liquidates one day and then the overnight session is up, it's a pretty good piece of information that tells you that this liquidation was nothing more than an inventory correction. Okay? And we kind of thought it was going to go lower because this was not a full day, right? This was an early close, right? This was not even a real day because the market itself wasn't open. So that's a holiday. So this is the real last full trading day. And yesterday, if you take a look, yesterday's low, that low, see how the lows are, they're still, if you take all this markup of the July 4th holiday, if you take that out, if we were able to just get rid of that, and you'd look at regular trading days, the lows are getting higher, right? This is kind of like, this is like penny stock action when they mark up a penny stock before a holiday, right? Just so everybody feels really good. But if you were a size long, right? Yeah, and we had a poor low. Exactly. Thank you, Ronan. Right? We had a poor low down here, which means there's competitive buying. We don't usually get poor lows that hold on an RTH profile. You will see poor lows in Globex profiles. And they'll get liquidated into later. But when was the last time we had a poor low in a regular trading hours profile? It's been a long time. I can't remember the last time we had a poor low. Right? So we came in, put in that poor low. You could see the inventory is mostly around here from yesterday. It's being sold up here in the overnight for profit, right? Remember, and that's, I was talking to somebody earlier this morning, and I was annoying, and I kept telling him, I go, remember, it's a market. Remember, it's a market. So if you're Walmart and you have 1,000 TVs, you want to sell those TVs for profit, right? So this is your inventory. This is how much you spend. This is how much you distribute at. The difference is profit, right? So if you're, I don't know, you guys still have Piggly Wiggly down in the States? So if you have bananas at Piggly Wiggly, right, you want to sell them for profit. Here you have ES contracts that you want to sell for profit. Because remember, ladies and gentlemen, it's a market. Please don't ever forget that this is a market. What's the purpose of a market? The purpose of a market is to distribute inventory for profit. Nothing more than that. Right? It is so you distribute inventory. Right? We have a P-shaped profile. We have single prints here, so shorts are trapped under 62.70 in Globex. So that's our first downside reference on any kind of liquidation. Inventories, I'd say what? 80, 90% long. So what we're doing is, in normal market conditions, we get a move down to correct inventory. So that's number one. Number two, we are inside the previous day's range, and we're also inside the previous day's cost basis. So that means business as usual. So don't look for breakouts until we break out, right? Until we leave yesterday's range, no drama. Hey, Billy, how you doing? Right? So it's inside yesterday's range, inside yesterday's cost basis or value, right? Either or, it's the same thing. Okay? And if that's the case, really don't have a lot of change going on. So how do we do it? We just trade the edges, right? We just trade the edges. We use the 1 minute chart. Right? If we get any kind of change, it's above 63.09.5 or below yesterday's low, which was what, 62.40 something and change, right? Until then, it's just going to bop around like this. I am not looking to see 62.20. I am looking for this, Aries. If we break 62.40, right, if we take out yesterday's low, so a lot of traders, I'm glad that you asked that question. A lot of traders they're looking for a lower level. And they'll be shorting and shorting and shorting and shorting and not getting anywhere. But until we break the overnight low and yesterday's low, and then 62.40 and then 62.30, there's no way in hell we're going to get to 62.20. Does that make sense? So I'm looking for back and forth within yesterday's range. I am not looking for this, nor am I looking for this. Right? Real simple. Right? If you open inside the previous day's range and cost basis, it means that business has not changed from the previous day. If you open outside of yesterday's range and cost basis, that means that there is a material change, as the accountants like to say, in the business. So right now we're going to open inside yesterday's range and cost basis. So it's business as usual. So how do we prepare for that mentally? We don't look for breakouts. We just trade back and forth. It's like ping pong, right? Just back and forth. Or, Raj, what's your deal now? Wimbledon? Right? Hey, Hank, what's going on? Okay, what's the baby update? Is the baby here yet? Hank's wife is due to deliver their baby any second now. I take it that you're posting in the room the baby hasn't come yet. And Raj is watching tennis. No baby yet. Jeez. Making you wait. She's doing well? Okay, that's good. That's the most important thing. Hey, listen, I'm not responsible enough to have my own children. So I live vicariously through you guys. So VWAP's at 62.77. Every time we've come down to VWAP, we've kind of caught a gentle bid and back up. So because we don't have to sell under VWAP, the sellers are really not that desperate. So when we open this puppy up, I think we are just going to go back and forth, and we can use the levels. Right? I've marked off where the sellers are coming in at certain levels. So if you're going long, you know where to get out. If you're shorting, like for example, if you're shorting this market right now, right, and you're shorting, oh gosh, you're shorting the 83s, right? Say you're shorting 83, 83 and a quarter, 83 and a half, right? You've got some orders out. Well, this is how you can manage your trading, right? This is a nice way to manage your short selling. Because say you're short here, okay? If the market starts offering over, I'd say 84 and a quarter, 84 and a half, start buying a few back. You can use these levels as sort of like warning indicators. So I'm short here. If I lose the seller here, say if that seller pulls up to 85, then I know, oh, maybe I should cover some contracts. If I lose that seller, then I've got 85 and a half. And then ultimately, if you're a short seller and the market takes out that overnight high, you've got stops at 91 and a half, which is the F high. You've got these little single prints from yesterday that that there was some supply up here. So let's see if we had a normal market in Globex. Now let's see if we correct inventory lower. That's what I'm looking for now, right? And I'm short biased going into the open. What changes my bias is if we start taking out these levels. So if we start taking out to the upside, so on the upside, 83 and a quarter, 84 and a quarter, if we start offering higher, then I know that that short doesn't make any business sense. Yeah. So that's a nice way where you can short with, you have some sort of market intelligence when you're shorting, right? Instead of just shorting and having a dollar amount for a stop, and there's no actual business sense for that dollar amount, right? Here, so I'm short 83 against 83 and a half, right? And where there were sellers before, there's going to be a little support because that's the position is under there. But if that level breaks, I'll go and put a bid down here, say at 81 and a half, and see if I can get a fill. Right? So I'm just short 83. I'm not getting a fill at 81 and a half, so I'll slide my bid up to 81 and 3/4 and see if I get a fill. And that's how I short. And I'm filled, right? It's not a lot of money, but the trade made sense business-wise because I saw sellers at 83, so that's where I started to sell, right? And I knew that if the market got over 83 and a half, 84, the trade doesn't make sense anymore, right? And then I just put my bids where I think they'll stop selling. Do you guys, does that make sense? Right? It's just simple. It's really simple. And it's all based on the business. It's not based on an indicator. It's not based on any kind of, options data, which I don't know how to interpret anyway. I'm not saying there's anything bad about it. It's just I don't know how to use it to make money, right? So I want the information that I can use to make money, right? So you guys don't waste a bunch of time looking at a bunch of stuff that's not going to actually pay you, right? I want you guys to get paid for your time, right? That's important. You got to be paid for your efforts. It's not going to happen right away in this kind of business, but at least you develop good business habits. That's important. Off of the open, what I'm seeing right now is I'm seeing a rotation. Let's see. I'm seeing a rotation from 84 to this 80. Do you see that back and forth? That's what I was talking about earlier. That's the rotation I'm looking at. So what I'll look for now is if we come down under, say, under 80, watch. Does it come down and come into this area here, stop, and then rotate back up? That tells me that we have rotation. See, there, it tagged it to the tick. Now let's see if it lifts or if it breaks. It's going to come in. And is this sort of a look below and fail? Do you guys understand what I'm talking about? That way, if you understand there's a rotation, if it does rotate upward, you don't want to be short at 80, right? Because we always end up getting short in the hole because we miss the short at 84, 83, 82. By the time we get our act together, right, we should be going long where we're thinking of going short. So say I go long at 80 and 3/4, 81, right? I know there's going to be sellers here, so let's see if we can get past those sellers, right? So say I'm long at 81 on 2 contracts. If we get past these sellers at 81 and 3/4, I'm going to put my sell order right here at 82 and a quarter, 82 and a half. I'm just scalping to see whether or not I'm seeing the market properly. Right? My out is here. And I'm just playing off the rotation. And this will tell me about, as we get close to the open, it'll tell me a little bit about the order flow. Because if we don't get a rotation, then I know I don't mind spending a little bit of money to figure out where the sellers are, right? I'm okay as long as we hold 80/4, right? If we start looking and taking out that level, then I know that my concept of what I thought was happening isn't happening. And I haven't blown up my account. I've spent a little money, right, to get some information. It's still kind of slow. Volume's light, eh? Boy, volume's light. See? See how we just had that little flash? And right where the sellers are, it tagged it? It's handy to know where the sellers are so you can manage your expectations. I'm flat. I'm out. I'm out my 2 contracts. So do you see how I took that trade, where the risk was, what was the business reason for taking the trade? The business reason was rotation. Now, if I had another contract, because I only bought 2 at 81, if I had another contract, I'd be selling it here at 82 and a half. Right? So there's a business reason for the trade. Right? And speaking of business reasons, this is why we want you to come to the Trading Syndicate.org, because we will teach you the business reasons of why your trades work and why they don't work. Right? This way, words like FOMO and tilt and all of those things that are just excuses for lack of discipline in business will go flying out the window, and you'll be able to trade with some clarity. You'll actually understand the practical business reasons why trades work and why they don't. This way you'll be able to manage your risk, and we'll teach you all of that for less than 50 cents a day. Right? So for less than 50 cents a day, you'll get practical information that you can use to actually make money. And that's our promise to you, is that it's simple, And you can scale it, which means as you get more skill, you'll be able to hold trades longer. You can scale these trades in time and size, right? They're scalable. They're built on business. No indicators. You'll notice all I've got is a 1 minute chart and some straight lines and a box, right? There's no Euclidean geometry involved here, right? It's simple, right? You know where the sellers are, you know where the buyers are, right? And we also have people we work with, like our friends at Apex, and they have sales all the time. We can keep you in touch with that, and we have traders who use these accounts. They'll help you. I'll help you pass your evaluation, and they'll help you navigate how to deal with these funding firms and work within that framework, right? There you go, Howard. How you doing? Thanks, Anne Marie. And if you do join, please DM me. I like meeting new people. If you have any trouble at all, let me know. We are going to open up now. It was yesterday's open. Here it is. It's good distribution, Doc. Remember, the liquidating inventory that we had yesterday was just inventory of the holidays. Right? There wasn't a lot of RTH inventory that liquidated except on the 2nd. So that could also explain why we're back up here. There you go, Howard, right? Make a little scratch before the open, takes the pressure off, right? It's always nice to take the pressure off. The worst is trading. The worst thing, and I'm talking from personal experience, in doing deals, taking companies public, or even doing retail trading, the worst is trading with a gun to your head or having to do business with a gun to your head, because it never works out and you always make bad decisions because you're under the bad kind of pressure, right? Now, let's see if anybody came into work this morning. It was pretty slow yesterday. Let's see what happens today. That's the worst. Every time I've pushed a deal or pushed a trade, it's never worked, right? Never. It's always the complete opposite. And the more desperate you are to make money, the more money you lose. It's just like, it's like a universal law. Okay. You'll see that it sort of mimics the stops. There we go. And we're off. Oof. Down to 77. Tagged VWAP. There's sellers at 79. Wait for the next candle. Just let it open. Let the large traders do their thing. You just relax. Then if we get over 79, we can maybe do a look below and fail of 79. But so far it's not there yet. There's a seller at 79. So now we have that piece of information, right? Hey, Derek, how are you? Good to see you. See if we can get above VWAP. If we can't get above VWAP, folks, we'll be looking for 73 and a half. It's a little choppy this morning. A little choppy. The order book's kind of thin if you look. Not everybody is back at work yet. So like I said, if we can't get up over VWAP, you're looking for 73 and a half, 74 on the downside. Remember, if you can't figure it off the open, just relax and watch for a little bit. We're only open 4 minutes now. Yes. The order book isn't full, which means it's like driving a car with bad shock absorbers, right? You hit a big pothole, the move is very big. So a large sell order, if it came in the book, right, it'll knock this thing down quite substantially. So as a retail trader, if you see a thin order book, you trade less size. You take less trades. You think about it a little bit more before, you don't take those shoot from the hip trades, right? What did I say, 74? Here comes 74. Now let's see. The top of the candles are where the sellers initiate. So if you do go long and it can't get to the top of the candle, you know that sellers are initiating. This is normal course of business now as the market corrects inventory lower. I'm long 73 and I'm just selling them now. I'm flat. I took a 73 long just because I saw the offer starting to lift, but I sold into the 75s and it was only 3 contracts. Not really worth writing home about. Just a quick scalp. Thanks, Jeff. So, to the downside, ooh, I forgot to mention this. Between 69 quarter and 69 and 3/4, there are these single prints. There's a tiny little short position right here. So as we get down to this level here, expect a little buying in this area, somewhere in here. Now, as we get up to that 75, 76, right, we had sellers there before, so that's where you're going to expect a seller. There, right there. Yeah, if those sellers see buyers, they'll raise their offers, and it'll be just where VWAP is where they'll step in again. But you'll notice how the market came up here, hit the sellers, and then rotated down. Right? Good information to have, because if you know where the sellers are going to engage, you know where to get out of a long, right? Or where to enter a short. So now this next candle, if this next candle can't get over 76.5, it's likely that we'll get some kind of choppy rotation lower. Let's see. Ah, there's 76.5. See how it couldn't get over that? And it immediately sold off a little. Not enough for a short. But once you start seeing that, right, it really helps you. I don't believe in failed auction theory or any of that jargon. You know, if you listen to what I'm saying about these 1 minute candles, they'll tell you where the buying and selling is. So I don't understand how a failed auction benefits you in a trade. I don't even know what a failed auction is. Does that make sense? Like, it sounds really, oh, that's a failed auction, you know, and you might as well be talking about barometric pressure. I don't know what these terms mean and how to use them to make money. Do you know what I mean? There's a lot of fancy language, and I have this friend of mine, right? We used to call him the small bastard. And I had this Saab turbo with a turbo boost gauge. And he was trying to impress this girl that we were giving a ride home. And she goes, "What's that?" And, you know, he piped in and he said, "Well, Meredith, it's a barometer." And I was laughing so hard I almost drove the car into a lamppost. Right? So I guess if you're trying to impress a girl, you can use things like failed auction and stuff like that, but I don't see how it helps you make money. You know what I mean? And I don't mean to be rude, but I think retail traders have had enough. You know? I think retail traders, I think they've had enough. I think they've had enough of being sold a bill of goods that doesn't make them any money, of being told all this jargon that doesn't help them. This is a look below and fail of 76. There's going to be sellers at 77, 78. If you're patient and you're long, if it holds 75, 76, it'll rotate up to 79. Yeah, it was the 80s, Derek, right? It was like, well, it's a barometer. And she looked at him, and I just started laughing so hard because he was trying so hard to impress this girl. You know, well, it's a barometer, right? It's well, it's a failed auction, uh, it's actually not too bad there, NFT. It's about 4 seconds. Right. Yeah, I think you guys are just tired of being, you just want to know how to make money, right? You know, next area, remember I said 79? Ooh, we punched through the seller at 79 half. So the next area we're going to have sellers is this area here, right? If we stay over 79 half, look for the 81s. Hey, Torcus, how are you doing? Now, for those who are short, right? If we take that A high, if we take out this area here, it's going to run the stops and your target will be 84 and a half. So be careful. Watch your whiskers if you're short and you're using 81 and a half as a stop. Okay? Because that's where the buy orders will start popping off if it takes that level out. That's the kind of information that you need when you're trading. Because you don't want to be caught short 77 and have a stop run push price up all the way to 84 and buy yourself in at 84. You want to be able to scrub that trade before it nails the stops, right? Save some money. You are going to be wrong when you're trading. I'm wrong all the time, right? But being wrong is a business expense. And you have to manage your business expenses in an intelligent manner, right? Oh, good. We have some sellers. Let's see if we can bring it back down to VWAP if we stay under 79. How's the coin of bitterness this morning? 108973. Yeah, the whole Bitcoin thing, I don't know what the next move is. Kind of watching it like a murder mystery. Yeah, I figured, Derek, I figure that you guys have had enough. You know, I think retail traders are frustrated and they're tired of being told all this mumbo jumbo. They want the straight goods. If I'm going to do this and put time into it and sacrifice time with family and stuff like that, it's got to pay. Back down to VWAP. Where's their next trade? Okay, this is another look below and fail of 79 now, but we have sellers at 80, so it's a little choppy. Not much follow through yet. We need more customers in the store to push it above 80. Let's see. Are they there? Oh, there we go. They heard me. See? And what did I say? If we can stay over 79.80, we'll go up into the 81s, and there's 81 and a half. Now, if we run those stops, now this is where it gets See how it just creeps up? But it looks weak, right? It's not just blasting up. And that's what gets people caught because they'll be shorting it because it looks weak. And see how it's just slowly creeping higher? Right? So if you were long on that look below and fail of 79, say you're long 80, sell into the little bit of strength that you've got here in the 82s. And if it can stay above, I'd say, if we could stay above 62.80, we'll eventually go up and grab that 84 and 3/4 stop. Nice work, Flair. And nice job on your garden shed, too. Lear's into full-on summer projects mode. Let's see if it can hold 62.80. See how it's catching bids? So how did I know that it was going to come to 62.80? Well, because that's where the seller was before. So the position is here and here. So they sell it down to the position, stop selling, and lift the offer. So you don't want to be short here. If you were short here, this is where you want to cover. Right? And that's practical. Practical information you can use. Now, how many people did we suck in on the short side under 81? We'll know once we get to 83. If we've got a lot of people crap short, we'll blow out the 83s and go up to 84. There you go. Right? There's 84. You can always tell how many people you get short on a move down by the strength of the move back up. See, Hank, when you do deals, you want to purposely trap people short. The more people you can trap short in a stock, the less work you have to do to hold it up. All you got to do is not sell. You know who I learned that from? I learned that from Omni's uncle. The more people you can suck into shorting something, the more buying power that you have because those people are now buyers. Right? A short seller is just a future buyer. Little distribution here. I don't see any desperate sellers yet. Not until we break 62.80. That's why when I take a company public, the first thing I'll do is I'll build a short position into the stock. That's like having a kickstand on a motorcycle. Here, let's watch 62.80. Under 79, back to VWAP, eh? That's good. It's good to see a sell order. That's healthy. That's healthy. Right? A little liquidation is good. And once again, why it came apart so easily was that the bids are from short sellers. And as soon as they see some size, they drop their bids, right? Short sellers, Agatha, are future buyers. So on this move down now, say under 79, say if I shorted 79.80, now I'm being forced to cover, right? So I'm going to be buying. That will hold the product up. That's all. Short seller's a future buyer. So we still haven't taken out or gotten anywhere near yesterday's close. So inventory in the overnight has not corrected in any kind of meaningful fashion. The reason is every time we get close to where those shorts are trapped under 62.70, the sellers just stop selling. You don't even need to buy a lot. All you got to do is stop selling and everybody will come in. And if you sell what little inventory you have on the offers are gone and people will chase price higher like they're doing now. Works like a charm. I had this one client, we used to call him the freak because he was so freakishly, like, he was intelligent in a sinister way. Like, he would figure things out before people even, like, he was always like 3 or 4 steps ahead of everyone. He used to be a British billionaire, and he was one of the smartest people I've ever met in my life. And he was like freakishly smart. And he would engineer these short squeezes. So I learned a lot about how a short squeeze is manufactured. That they don't just spontaneously occur. It's not like dandelions just popping up. Now these markets, the squeezes aren't done purposely, but they act like it because all size traders are trained the same way. We trade inventory and order flow. So everybody has that sort of group think, and they'll get trapped in certain areas. Now we finally got some liquidation at 81, 82. If we can take out VWAP, that would be healthy. If we could get down under 62.70, that would make the price action a little better. Look below and fail of 79. So if you're long 79.80, look to sell at 81.82 for take your first profit. Boom. Right. So the trades we take are based on the sell order that took the market under here is done, it rotates up. Sell order is done, it rotates up. So the trades are based in business fact, not fiction. Now it's just chop. Chop, chop, chop. I don't see a trade just yet. Under VWAP, maybe a short. Maybe a look below and fail of 79.80 again for a long. But not great expectations just yet. All right, under VWAP. There we go. Oh, come on. Come on, come on, come on. There we go. Come on, sell it like you mean it. All right, we need some liquidation, folks. So if you're short 79, 78, we're looking for 75 on the bottom. First target. Oh, come on. If we start lifting over 78, watch your whiskers. There we go. Come on, sell it. Man, this thing's hard to short. There we go, 75. There we go. Poor low, right where the short position is. Right. I don't own any stock, Derek. I own Bitcoin, and not a lot of it. I have a small Bitcoin position and some of that other crypto schmipto stuff, just in case it works out. When it gets to levels that I like, I'll add to the position. But I don't hold stock. Um, I'd rather just go and do a deal, you know. And that probably is a bad thing. I've never been an investor. I've always been a liquidator. So I've been trained to sell stock my whole life. You know, so if I want like a really big score, I'll go take a company public and blow off, I don't know, 50, 60 million shares of stock, right? That's what I've been trained to do, right? Traders are the worst financial planners, especially guys who used to do what I do. And it's bad because you're like, oh, if I ever really needed money, I just go and do some consulting for a public company and get some free stock. Right? That's another thing. I've never paid for stock in my entire life. You know, in 33 years in the business, I've never actually written a check and bought stock or bought stock in a brokerage account. It's always given to me for free. So I'd never buy it. So it's like a foreign concept to me to actually spend money on stock. Here we go, coming down. If you're short, you can stay short if we're under 72.5. It's, and we haven't had a look below and fail for a while, Joey. We're we're to the downside now. So I'm looking for 62.69. That's my target to the downside now if you're short. Hey, you need somebody to get coffee when you're doing deals, Derek. You can never underestimate the importance of caffeine when you're trading out paper. There's 69.5. So we had a look below and fail here, Joey. This is all look above and fail. This is all short, the last 5 minutes, I'd say. Filled the single prints to the tick. Came to yesterday's cost basis to the tick. Now, on the lower side, let's see what we hit to the downside. This is good. This is healthy. Notice how long it took to sell off, though. It took a full half hour before we finally trapped enough people to create some selling. I think it was just a backfill, yeah. But that's okay. You made money on the trade. A look below and fail, Joey, is when it does this. When it comes to the edge of a zone, goes underneath it, and comes back up. Like, say this. Right? This is a look above and fail. So you might have just caught like this candle on a backfill or something like that. Yesterday's cost basis is simply where yesterday's inventory was priced at. So 70% of yesterday's inventory, Raul, is priced here. The market was selling it at a premium for profit, right? And then when we ran out of buyers, we just sold the market right back down to cost basis. Right? So say you buy 1,000 apples or oranges or bananas and you pay 10 cents for them. You go sell them at 80, 90 cents. Then you put them on sale back down to 10, 11, 12 cents, stop selling, and see if the buyers come in. Otherwise, you put it on discount. Right? Shorting this market is not easy. It is definitely not easy. You know, let's see now. If we stay under 69.25, I'll be targeting the close down at 63. So I'm going to watch this candle now. Right? There's a little buying at that 67.5 stop. As we come up, I want to see where the sellers engage. Right? If they start engaging and we get under 69.25, then I can take a little short down to the close. Right? Short 69.25. Covered one at 67, one at 67.25. Got a 66.75 bid in. No love there yet. I'll take another one back at 67.25. Two left. 66.75 bid. No love there. I'll take the offer on one more. Leaves one filled at 66.25. Flat. So what I did was I saw the seller. I hit the 69s. And I started buying them back here. Now it's going to come back up. When it comes back up, looks to see if that seller is at, where is it here? 70, right? Just pay attention to where the sellers engage, right? I use 5 p.m. New York, Tom. I use the very last. I want to know. I want to know where they stashed all the donuts. That last half hour tells me where the inventory is. So I always use the 5 p.m. close. Where would I go long? Uh, Once it finishes correcting inventory areas. I might do some scalp long if we do a look below and fail of 69 and a quarter. If it gets over 70, maybe go long a little bit. Look for 72, 73. But right now, I think we're still liquidating. Inventory still has not corrected fully until we get down to 63 and a quarter. And I see sellers at 70, so there's no reason for me to go long yet. Right? When I see constant selling, right, the tops of these candles are where the sellers initiate. So if I see sellers initiating and pushing price lower, there's no reason for me to go long. I want to wait till the selling's over, until those sell orders are done. It does a little bit of this and then comes back up. Now sometimes it comes back up so quickly that you miss the trade. And I'm okay with that. Right? Just like getting stopped out, I don't mind missing trades. Because they tell me about the market at the time. They give me good information. I see we've got sellers at 70. So if you're looking to go long, right? If we start crawling over 70, up to 72 and a half. But I know at each of these stages here, 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 there's going to be sellers. See, it's not just quite ready yet, Aries, eh? Oh, little chop. Let's see if we can. There we go. So now, Aries, if you're going long with your eyes open, right? You know there's going to be selling up here, so you're not waiting for that long up to 80, right? Well, it's because the inventory from the overnight is above us, so that's creating selling pressure. And when it's not really clear, that's when you kind of take a little bit of a step back and let the large traders do their thing, right? Okay. See, now I'm in the UK, Derek, so I'm up at around 5 o'clock London time, which is around midnight New York time. So that's when I start looking at Globex up until regular trading hours. I like trading Globex because it's a little slower, um, and the agenda is very clear. And it kind of takes the edge off. Like if I can make a little money during Globex, then I don't have to put as much pressure on myself in RTH. And I find that's really helped over the years. Now, of course, officially Globex starts at 6 o'clock New York time and ends at 9:30 in the a.m. the next morning. But I'm not up for the whole session. So Aries, if you were long 69.70, 72s, maybe 73 if you're lucky, you're going to get rid of your product. Right? Larger traders, if it holds 73, next place you're going to see some resistance is 75. There's 73. So you can take it in stages, right? Drunk guy going up the stairs, right, Moran? Oh, boy, oh boy. It's not bad. This week's better than last, right? At least there's some trades. It's good. It's good. It's good. I'm uh, I'm happy to see that. Now all we need is just nice no drama, and we can just go back to business. We just have a nice casual trading summer. You know, make some money, have some potato salad. You know, just chill. It's like just a drama-free summer, right? How do we know out of all those selling levels which one could hold the strongest? You don't. You don't until you get up there. But what it is it gives us market awareness. So say I was long at 70, I would have been out at 73, right? It could go to 74 and a half without me. Derek, I have, remember Windows 95? I've got Windows 95 and a boat anchor for a monitor. uh, I work from home. I haven't paid for an office since 2001. Yeah, casual and trading is good. You got to be relaxed, eh? When you retail trade, you got to be relaxed. You know, but not too relaxed, but relaxed, right? So when you watch Billions, Moran, everybody always asks me, were the people like that? My clients were like that guy called Hall on Billions. You know that spooky ex-CIA guy? That's what all my clients were like. They weren't like Bobby. They were like Hall. All the previous market makers that I used to work with, a lot of them are dead. Um, some of them are selling burritos. A lot of them made so much money that they just, bought a bunch of real estate and chill out. Some trade. One of my buddies, well, he passed away in 2017, and he was probably the fastest trader I've ever seen in my life. Was one of the most brilliant market makers. We lost him in 2017. And he used to retail trade. He was really good. He was probably the best trader I've ever met in my life. He could trade a million shares around somebody and they wouldn't even know what the hell was going on. He was just one of the most talented traders I've ever met, and fast. Like, if you think I trade fast, my God, this guy was just phenomenal. I miss him a lot. He was also one of the most feared short sellers back in the day. Every time he'd pop up onto a stock, everyone would run for their lives. Uh, Can't believe he's gone. Another look below and fail of 62.69. Starting to slow down in pace here. Oh, no. How do I manage R multiple if I'm booking quickly? I don't know what the hell that even means. Honestly, I don't even know what that means. Sorry. I try and make my daily bread, and if I don't, I stop trading and wait till the next day. Like I said, I'm a blue collar trader, right? I try and squeeze a little money out of the market every day. If I'm trading poorly, I shut it down. If I'm not seeing the bigger picture, I shut it down. But I don't understand your question. How do I manage R multiple if you're booking quickly? Booking what? Like booking a hotel room? I'm looking for 62, 63 and a quarter, the close. What am I booking? Sorry, brother, I don't know how to answer the question because I don't understand it. Coming up on the close. I do understand liquidation, and that's what's going on right now. Oh, all my trades are based on common sense. So say I spot a seller at 62.69, right? I sell it, put my stop at 70, right? And then I'll cover at 64 and a half, 64 and three quarters, right? Because I'll front run the close because I know there's buy orders there. So I don't know a fancy way of saying that, managing R multiple and booking, right? So my risk is about 6 ticks. My profit is maybe 3, 4 points. Does that make sense? It's pretty simple, right? Trades are based on common sense. Risk is based on common sense, right? If the business reason for the trade goes away, so do I. Does that kind of help? You won't get a bunch of fancy talk out of me on these streams. I've been doing this way too long, right? Yeah, we came close to the close, right? What did we get down to? The close, what's 62 and three quarter and a quarter? We got down to what, 63 and three quarters? Close, 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 close. Thanks. Yeah. All I'm trying to do is trying to find out where I can do some business, right? Once the larger traders find the bid, right? Say I missed that short, right? I wasn't in that short. I'm looking to go long. Now I'll let the larger traders clean up the market, and I won't even think of going long until we get back over 70, right? Keep it real simple. Trade less, make the trades count. When you get stopped out, take that information and learn from it, right? And that's what we teach you at the Trading Syndicate. I'd invite folks to come join us. For less than 50 cents a day, we'll teach you real world practical information, right? And give you a plan to go and actually make money as a small business person. We'll treat the business as a business. so you respect it, so you get a sense of urgency when you're trading, so you're not falling asleep, right? And you're not making crazy assumptions, right? The trades that you do will be based on solid, real world business principles. And the other thing will help you is we'll help you with those funded accounts and we'll actually help you keep your money because there's no sense making money and then giving it all back that afternoon, right? There's no sense doing all this work, making the money, and then just giving it all back. That's completely counterintuitive to business, right? So that's what we do at the Trading Syndicate. I'm here every day. We do 2 sessions. We do one at 7:30 in the morning UK time, which is 2:30 in the morning New York time for the London Open, and then we do this one at 9 a.m. Eastern time. Well, some people just get into trades and think everything's going to be okay, right, Moran? We want to give people situational awareness. And that, my friends, wraps it up for Tuesday, the 8th of July. And we're still inside yesterday's range and cost basis. So just keep trading the edges. Wait for your setup. When your setup hits, hit it. If you're wrong, admit you're wrong quick. Right? Save your bullets for the next trade. Thank you, everyone. Have a wonderful trading day. I'm JJ. Thanks for joining us. Please like and subscribe. Keeps the algorithms fed. And we appreciate all of you. Have a great day. We'll see you in a little bit. Bye for now.